Welcome to my flipped video on accounting, normal, and economic profit. Today you will learn how to use these concepts. First thing we'll look at is the key terms. We'll start with accounting profit, which is the total revenue, the money that you take in, minus your explicit costs, the monetary outlay of your business or all of your expenses. Normal profit is when economic profit is equal to zero. Now what's economic profit, you might ask? Economic profit is accounting profit minus implicit cost, which is the opportunity cost of using self-owned resources and the value of the next best use. Economic profit is also equal to revenue minus explicit and implicit costs together. Implicit costs are which is a cost that is represented by lost opportunity in the use of a company's own resources. Explicit costs is a business expense that is easily identified and accounted for. Now we will look at an example of accounting profit. Let's look at Mudry's mud and tree removal, for example. The revenue is $50,000. Now for the expenses, we'll say labor is $5,000, equipment rental is $6,000, rent is $7,000, insurance and advertising expense are $3,500 and $2,500 respectively. Now the total expenses, all of these add up to $24,000, which would give us an accounting profit of $26,000 from subtracting $24,000 minus $50,000. Now to look at an example of economic profit, we will look at the same problem with the revenue the same and the expenses, also known as the explicit costs, all being the same. So all of this was totaled to $24,000 on the last slide. Now, for economic profit, we have to take into consideration the implicit costs, which is the wages of another job foregone. So let's just say a job at Walmart for a year would give us $20,000. So Mudry gave up those $20,000 for the $50,000. So we add $20,000 plus the accounting profit of $24,000 gives us $44,000. So subtract $44,000 from $50,000 and we have an economic profit of $6,000. Not that much anymore, huh? Now let's look at this graphically on a perfectly competitive blurry graph. To find economic profit, first you have to have your average total costs be below price. So as you see, it's right here. So the economic profit is this box right here. Now, if the firm was earning normal profit, the average total cost would be touching the price line. Accounting profit isn't taken into consideration graphically on a perfectly competitive graph. As Dick Burnell and Ref would say, understand these concepts, know these concepts, and own these concepts. Thank you for watching.